Hey everybody, it's James here. So decided to you know make today's video a little later than usual because I just had to get a lot of stuff done today, like change my phone carrier and all that jazz. So got some chores out of the way. So it took about 2 hours to get all this data together for you guys. So I mean, y'all get to just look at it honestly. Save you some time doing it yourself. But this is the data that we're going to be using is this right here. So these gainers. So like basically like from IPI and up, from OWCP or from OWC on IPI, all this, and we can just like look at it real quick. Um, let's see. Uh, I have the losers too, but it just takes too long to go through those two. Um, and I don't ever short stocks. You short like forex and stuff, sure, but stocks. Stocks have a higher chance of going up. So, it's just easier to make money if you're betting, uh, positively. So this is the amount of money that was traded today. There was 46 stocks, and I got to take off this top row. So 46 stocks that were up on the day, over 10%. And you can just like kind of look at you know, um, uh, add all this up, like two, that 2 billion, yeah, $2 billion was traded today on stocks that were over 10%. So people are like, oh, like trillions of dollars get traded in the forex market and all that. You can get like pretty like big chunk of this $2 billion market. I mean, you know, billions, trillions. It don't matter to me. That's still like more money than I've ever seen. So um, penny stocks are like the way to go in my mind because there's just more structure. So, okay, like let's get out of this. There's just more structure in penny stocks. So, like with this one, the top one, it's went up 130%. Um, you can see like it holds Fibonacci level pretty well. Like it holds the moving averages pretty well. But what I'm really talking about structure is like whenever it tests something like a double bottom here and a double bottom here, uh, like right there, it would have stopped whoever put it right there out. But you don't need to be putting a stop right there anyway after this move below the moving averages. So for there to be such a tiny stop run, like that says volumes about the strength, especially considering it bounced off the 35 EMA. So structure to me, like it's like like if something is like running stops. So say something's positively trending, but like say like right here, like you're looking to buy, like you got a measured move. You got this right here, and then this right here. They're about equal length, so it's a measured move. Market usually moves in two. So if you're looking to buy something and hope it goes up, you'd want to find a safe spot to put your stop to where hopefully like the market won't go to that level. But if it does, then you're out of the trade because it could potentially like go like even more down. So if you put a stop right here, you would have been safe, because if you put it like exactly at that spot, you wouldn't have been safe. But most people will put it like one tick below that space, and you would have been safe. Whereas like in things like forex or you know, really high price stocks that are like traded like Apple or Google, that are traded like basically like leverage products. So like people are like borrowing money to trade the item. So there's like millions, like there's like billions of dollars traded like through just a few like currency pairs or like a few like you know like the E-mini, like things like that. Like those are like leveraged. I mean, I'm not quite sure about the E-mini, but like oil and all that stuff, like commodities, like I'm not quite sure if it's leveraged, but I'm sure there's people out there um, that are like I know for a fact that forex is leveraged. Like I mean it's forex, so like it just behaves differently. For some reason, it'll come out and that wouldn't have been such a light tap. It would have like punched through, and then it would have like gone up. So I do think that trading penny stocks is easier in the sense that like there people like stick to structure more. Except like right here, like that's kind of crazy. But like I mean that was it wasn't a glitch. It was just somebody bought a share like way down here at like size, and it caused the price to go that far down in a second, and it corrected itself. So I mean, you could have got stopped out on that. Like I'm not quite sure, but like I mean, you would know that it's like a glitch as soon as like that happened, and it got like right here. I mean, it started trading like normal. Like, it might just be like Thinkorswim, like um, Thinkorswim uh, problems, uh, but you know, I mean, it did look like it didn't really affect trading that much. So I guess it must not have printed on other people's charts. Probably just mine. But yeah, I mean, like let's just start to like flip through these really quickly because I don't want to waste too many people's times. Too many people's time. So I take the Fibonacci off like a break, so that formed a higher high. So I was drawing the Fibonacci off this, and then boom, higher high. So it's right here. So like it expanded to the 3618, and I fully intend to like crunch this data. Like when I get enough charts, like I'm going to like take all the charts, and I'll have like thousands of charts, and like I'll just like basically like go through each one and like see like which Fibonacci level it hit, before it had a major pullback, or like just data or like moving average data, like which moving average is the most common to pull back to with these stocks that are up over 10%, like basically like penny stocks, like what like what is the best like statistical like Fibonacci move, or moving average move, or like so I can be buying at like be I could potentially be confidently being the first to buy or the first to sell, because I know that statistically like this is what's happening like most of the time. So like that's really like the main reason I'm doing this. Also, I'm doing it for like exposure. I mean, I can look at like charts, like hundreds of charts, like, and I could just flip through all these charts that I've saved, and I mean, I could make notes on them. I think the Fibonacci level is enough notes for me. I mean, I can just look at it and see like what I need to see. I mean, it's kind of boring, but like it is fun to do. I feel like I'm like improving every day, honestly. Uh, it's less difficult for me to like find like the break. Say like it's like those choppy charts, and it's like you know it's like really hard to draw the Fibonacci because it's kind of like, I mean, it's kind of a gray area. It's not like easily to see. It's not easy to see like the break, like right here, like going up, and then you have a break right here, and then a break right there. But I mean, it would really like, this is one of those gray areas. Like you could have drawn it from, actually no, it's not a gray area because the break goes right here. So that's what I was looking at. I was looking at a new high, so that made the new high, and but I mean, if I can see a gray area, like there was a couple times where I had trouble like drawing the Fibonacci because it was just so choppy. And I mean, those kind of charts anyway, it's like I wouldn't be trading it because, I mean, usually they don't have a lot of volume traded. I just do it for just for like, honestly, I do it because I have this like list here, and where is it at? It'd be nice to get my list. Okay, so like this list, and if I'm missing one, then it's gonna like mess with the data. Like it could be like a good chart, like because I can go through and look at patterns. So I want to have every single chart that's up over 10%. Otherwise, the data is not going to be good enough for me, or anybody really. Like you want to have complete like data to go through, and this isn't even complete data. Like honestly, like it just gets too tedious having to get, anywhere from 5% and up. Like that's like hundreds of charts a day. Like it's crazy. Like I'm not doing all that. It's hard enough to do 10% and up, but like okay, so like let's just start going through these. So like this one used drew off here, so break a high. The break of the high was right here, so did this move. So um, uh, low, high, low, and then it expanded up to the 3618. So you see that like it had a pullback, and so whenever it broke that pullback, like that's what I'm really looking for. So I'll look for a move, and then I'll look for a two wave, and then I'll look for a break of the pullback, which is this is the three. So this is the impulse three. Really, that's the impulse three, and that's the pullback four, and that's impulse five. So like that's how it works. So like this stuff is like choppy, you see, but like you can see how like it clearly like um it had this level right here. So we got it just starts the day off right here, and then it has a pullback, and then it makes a new high right here. So whenever it like had this, this flat like line, I guess I just I just drew it off that. Um, no, I'm sorry. No, yeah, that's it because like uh, maybe I drew off this break. So like whenever that break happened, I was looking at it like that. So like low, high, low, and then it just expanded up. Regardless, I mean, people did the same thing. Like they just took this one right here, like this top one, and did from the bottom. So low, high, low, because it eventually gets broken. So like this, I don't know if it's a pullback, but this sideways market got like broken and it had a new high. So like sideways or correction, I mean, same thing. Um, okay, here's another choppy one. So like going down, uh, so like right here was where the pullback started. So whenever it breaks that pullback, so like right here it broke the pullback, so it's going down. So like right here to here to the so like uh, this is a downtrend, so it's high, low, high, and you can see it hit that 618. So I did draw it correctly. Um, this is where I have two different colors. Like so, two is going to be red, and like if I had a third Fibonacci, it'd be like yellow. I'm not gonna draw any more than three in case like unless it like really really needs it to complete the chart, but it just clutters it up so much. So like I drew this one off this area right here. So like impulse one, pullback two, impulse three. So I broke that pullback, so I draw it off impulse one. So low, high, low, and then it expanded, hit that 3618 and the 6618, also the nine, and then um, it's going up, and so like honestly, I ran out of like room. Like it stopped printing Fibonacci level at this like 10.618. So I just added another one in here. So like low, high, low. You can kind of see. Oh man, that is pretty close up. So low, high, low. So right here to here to here because it broke right here. So that's one, pullback two, really like pullback two, and then or I'm sorry, pullback two right here. So one, two. This like any sideways movement or like it's a trend line. So this is a line, and then this is another line, and then that's another line. So like any like new like any break of a trend line. So this is trend line one, trend line two, and then trend line three. So two like formed a new line. So if something breaks higher than two, that's three, and so um, that's that means that this is now an uptrend. So you take low, high, low, and that's low right here, high right here, and low right here because of this uptrend that's forming. So like that's how I'm doing it. So and then you can see it worked because it hit that five and that five Fibonacci level. 5618. Okay, so then pull back. Okay. Okay, so drawing it off here. This is like one of those ones. So like, it looks like I drew it off this little price. Like that's a price movement. So bottom. So low, high, low, low, high, low, because it broke right here. It broke. So like, I saw this as like one trend line actually. Um, this was like one trend line, and then this was two. So trend line one, trend line two, and then it started trend line three. So I drew it from, the bottom of one to the top of one, and then back to one, back to the bottom of one. So that's for an uptrend, and it went up to that 4618. Really went up to the 10618, honestly. So yeah, I can go through and like find out how many times it'll go like to the 10618. How many times to expect it, and if it's like statistically significant, like that'll help me out. So like, let's see. All right, so like, so coming in, I did. This is a one, and then a two, or I could think of it like this. One, and then a two. That's probably what I did. Yeah. So one, two. So I was counting here, and then obviously like I'm looking at the chart, so I know it's gonna be an uptrend. But if you didn't know like all this was gonna happen, like say like I can't like block it out, but like say like that's all you like really saw was like that, you would take this is impulse one, pullback two, and then it'd be starting. And if it broke bottom, then well you would count that as like a break to a new low. So then it'd be you draw the a Fibonacci price expansion to the downside. So like to see like where targets would be to go lower. But since it like never broke to the downside, you're looking and it started to go back up right here. You're looking, but it failed right here again, but then it didn't. So anytime it like forms like a little trade triangle or a trading range, like right here, it formed like a pretty tight trading range, honestly. And then it broke to the upside. So you would draw the one. So like this would now be one. So one, two, three, and yeah. So bottom, high, bottom. So you got a 3618. Look at it. It hit right at the close. It closed at the 3618. Like that's how you know you're drawing it good. And I mean, I'm pretty good, confident in my Fibonacci skills now that I'm able to draw it correctly. Uh, but I have yet to. I mean, I've drawn them like in real time, but it's been so long. I've really just been practicing for a while. I'm gonna keep practicing until I feel like confident enough to like risk money. So like, let's see. This actually like expanded to the 7618. I mean, honestly, these are pretty random like intervals. Like I rarely see it just go to the 618. The six. Usually it'll go like past the six. So like that's kind of data like I can gather. So like I'm excited to see like what it'll look like. Honestly, I'm gonna kind of skip these like choppy charts and just go to like stuff like this. Um, so yeah, this one was weird drawing honestly, because it was just so like random. Like it opens up on the day and then it like pulls back and like like this in the third minute it's like reverse like all that, and then it starts climbing again. So you would take uh, I took it like this. So uh, I'm sorry, low, high, low, because if that's one and that's two, well then that's three. So when it broke right here, I can draw low, high, low, and that's what I did. I drew it like over here to the right a little bit. So low, high, low, low, high, low, and then it expanded at 1618. So I got it. It worked, and then it's coming down. You don't really know. Like, I mean, yeah, you can see how it gets below the EMAs and has a EMA bounce and all that, bouncing off the 200. But I also made a lower low, so it's downtrending slightly, but then it starts to uptrend. Um, it goes back to the 1618 and fails. So like that's probably a pretty major sign. Like whenever this failure happened, like people are like expecting it to like catch at the 14 and like keep going up. So like when that failure happened, like it's a pretty negative sign. You can see like people thought it was -2, and like that's what happened. But it did end up turning around. Like it had a basically a measured move. So I guess like from right here to here was one move, and then from here to here was another move. Uh, but like I mean, these measured moves are kind of like I mean like that's really like one, and then you can't. It's there's two in there somewhere. Like I guess it's like from here to there, and then there to there. Measured moves. I mean, they happen so often everybody knows what they are, but just because you know what a measured move is doesn't mean you can like make serious money off of it. They're pretty random. um, Sometimes they happen perfectly, sometimes like textbook, other times they don't happen textbook, and you can only see it like after the fact. But maybe I'm just not a good trader like that, like that's not my area. you know it's not my style, I guess, style of trading. uh, because I do know some people can make money just by spotting a potential measured move. So like let's see, EMA bounce. So like that's one. That's what I count as one. So like low, high, low, and it's because it broke right here. It's like that high got broke right here. So that's my first impulse pullback, and that's the red. And then also the yellow. I did another yellow right here, just because I think it didn't fit right. It was weird. Like, oh, I remember now. I wanted to see like which one like is a better fit. Like, should I take the one that's closest to the uptrend, like getting above the EMAs? Like, is that the one that people are drawing the fibs off of, or is it the one that like literally like is the turning point, like the pivot point of the chart, like where it like pivoted, the lowest point. I was thinking like probably like the lowest point, and it did catch right here. But this point also, like this move right here, also caught like right here. It caught right here, uh, and it caught there. I mean, it was pretty like much the same thing. It's kind of weird, honestly. I'm not quite sure. I guess it's because it's so proportional, and like Fibonacci is proportion, and that's like pretty much a proportion of that. That's probably why. Um, yeah, I'm moving on. Honestly, like see like how it hits that 100. The green line is the 100, and it does test that 100 a lot. And then the 150 too. It also tests the 150. Uh, I end at the 200 because like that's basically like to me, if it breaks below the 200, it's pretty much gonna downtrend. So I can find data on all those moving average tests like eventually. So it's another chart, CYH. Um, it was like basically a trading range, and there was equal like equal fight between the bears and the bulls. Like it was kind of bullish though because like it had this initial bullish move, and the bearish move didn't retrace the whole amount, so it's still bullish. But when that happened, it's like obviously you got to do a bullish Fibonacci level because it broke, so you're drawing bullish. But when it failed, um, you got to do it to the downside now. So like especially when it did this and had first impulse pullback, and then I drew this Fibonacci level, this red one, when this happened and it broke this level. So like at that point, then I drew this expansion to the downside because it turned into a downtrend. You can see how it caught on that one point. I'm sorry, 1.8, and then it like reversed, and so like at this point, I drew the third Fibonacci, and I did high, low, and it pretty much called it like pretty perfectly, like right here, 6618. Oh, it does go to the 6618, but not. But yeah, like okay, so I'm trying to go through this quickly. Let's see how long this is. This is where's it? 25 minutes. Dang, this is going by so. This is going by so slow. Okay, how far am I? This is what call Where the heck is God? Oh my God, dude, I got all these to go through. I'm just gonna like try to go through this quickly. Okay, so yeah, this took forever. This took like an hour to do, honestly, like going through all these. Okay, so impulse, and then it comes up here. You can just like kind of watch. Like, actually, that's kind of weird. So like pull back. Um, when this break broke happened, I did low. Uh, oh, that's it right there. That's a price point. So like right there is a price point. So like low, high, and then back to low. So low, high, low, and then it caught it perfectly. So even those like little like weird moves work. So like we're going down, up, down. Uh, so like yeah, I was in a trading range. It broke to the upside from right here. Actually, like right here, I drew it. So low, high, low, and then the third wave started happening. So I drew it off that, and I mean caught it pretty perfectly at the 3618. Okay, this one, it's going up. I would even count these like as pullbacks, guys. Like these like little 1 minute red bars, those are still pullbacks, and that's a strong uptrend. But because of this, like, um, like I used to think of that as like a pattern. So like, I mean, I still do. Honestly, it is a pretty reliable pattern. But it's one of these like penny stocks, like like under like 50 cents, like really like under 40 cents. Like they behave super erratically. Honestly, under 80 cents, like they behave erratically, like, and they're not as reliable patterns. Um, just because nobody's interested in it. I mean, like, look at the volume. It's like 100,000. It's like $3,000 or something like that. Like, you know, traded at that minute. So it's like not even like anything special. Okay, so uh, all right, yeah, this one is weird. I'm just gonna skip these weird ones. Well, I'm getting into the 17 and 16s, honestly. Like, I'm just gonna flip through so y'all can see them and stop talking. Honestly, you can kind of pause the video if you want to study it yourself. I can hide my screen. I think that's a better idea, to be honest. So going through. That was cool. Did it off this one right here. Pretty much textbook. So broke this high. So that's 1, 2, 3, and you draw it off the one. So low, high, low, and then it expanded up to the 5618 perfectly. And it's a pretty fairly like traded stock, you know. Uh, yeah. All right. So yeah. Excuse me. Oh, I love Mountain Dew. Right. Everybody does though. See, like, I mean, I draw the Fibonacci's on these. These are like kind of weird because, I mean that's pretty much a trend line. It's a trend line all the way up. Uh, but I mean, it broke the trend line like slightly right here, so I just drew it off this slight break. It was like a 1 minute broken trend line, but it fixed itself. But it was a slight enough break that that could be a two, and then that's the continuation of the trend with the wave three. But it's just so choppy. I mean, it's almost like you're wasting your time, like drawing Fibonacci levels on that. Even though it did adhere to it, I mean, maybe it's not a total waste of time. I mean, I would never trade something like this. Oh, is this the last one? Heck yeah. RGIN, is that the last one? Yeah, it is. I mean, what time is it? 30 minutes. All right. I mean, it's not like I'm on a timeline, but I don't want to make them like super long. I'll just get like the first like three of these negative ones because some people like to short stock. So That's choppy. I don't even care. This one has like pretty decent volume. I mean, not great, but like, I mean, a lot of these just like open the day like down like 50% and then don't do anything. But there's quite a few that will just like go from like 0 to 100 like during the trading day, which is pretty cool to see. I think Fannie Mae, like something happened with them. Like, I think it's weird. Like the government has like a stock, you know. Uh, they must have had something bad happen to them. I don't even know. It's kind of weird. Uh, but yeah, I mean these patterns like they repeat like over and over again, and I'm just biding my time, like saving up money. Hopefully, I can be a successful trader one day. Honestly, like I feel like this is how you do it. I mean, yeah. There's Fannie Mae. Fannie Mae just straight downtrend from like $4 to $2. That's crazy. Ugh. I don't know why it doesn't say. You know, I feel like my math abilities are terrible because that's like four, and that's like 430, and that's 250. Wouldn't that be more than like negative 34? Like, is that 30% down? I feel like that's not. Like, that's like more like 50%. Like, honestly, like closer to 50. I don't know. It's probably 35%, like it says. I should probably just keep my mouth shut. uh, yeah. All right, that's the last of it. But but yeah, I mean, I fully intend to oh yeah, and I thought of this to do. I mean, honestly, my dad told me like if I'm gonna do this, like I gotta make a disclaimer. So let me do that real quick. The heck is where? Okay. So like I'm basically like not a financial like licensed like financial like advisor. I did go to college for it, but I didn't graduate. So like I mean I'm basically like just like average guy. So um I am not a registered financial advisor. Uh, take any advice at your own risk. Make that like 12 and Arial. Alright, so like that's my disclaimer. Okay, cool. Alright. Yep. So I mean I'm gonna I mean this is like a picture of like what I was trying to do like when I first started. If I can zoom in, that'd be nice. I don't think it'll let me. Why won't it let me zoom in? But anyway, so like impulse one, pull back two, impulse three, pull back four, impulse five. Oh, excuse me. And I was looking at the EMAs, so I was thinking like 14 EMA would be the first pullback, and then 20 EMA would be the second pullback. And if it gets above the EMAs, well, I'm looking to buy it right there, and I can just slap a stop underneath the test of the 20 EMA. And I mean, it looks like a pretty good like pattern, like because like look at this. Let's see. Here's something. Here, like, that's not a good one. Okay, yeah, like this one got me started. Like honestly, like I had had these pictures. So like 14, that one went to the 35, but it got above the EMAs. So I mean, it kind of, sometimes it fits it. Sometimes it doesn't fit it perfectly, but it fits the picture, of the Elliott wave trend picture. And then I mean, it climbed. I don't know who buys it like up here, like crazy people, I guess. I don't know, like people that can be in out of the trade at like no commission cost or something like that. Like they're risking like 0.5% up here, you know, um, because I don't know, what kind of patterns they study, but like most of these charts, like, um, I wish I had like a percentage like thing. I think PULM went like crazy. Yeah, this one went up like a lot. Like so, we got two. Um, so like this is where like this whole chart, like this is where I saw the pattern because like you can kind of see how it tested it, the 20 right. I mean the 14 right here, and then it tested the 20 right here, and it got above the 20. So I'm looking to buy it, and then it goes up. So like I would have got like what 350 to like 450, 440, and I would have been risking like 350 like 15 cents on like a $350 stock. Like it's basically like 4%, 3 or 4%, 3.5 really like percent. I mean like that's what that like gets me excited right there. Like seeing that like that is exciting. But yeah, I mean I don't really like I'm not like the greatest like trader, so I wasn't able to fully take advantage of like all my knowledge when I was trading because I don't have any discipline. Like honestly, like I just kind of make like basic mistakes. Like I don't even like follow like I didn't follow even my trading plan. I was like trading like randomly. Uh, I mean they do say like emotion like really is a big factor, and it's true because I mean, I just like got so greedy like on one trade, and I was like 7% on it when I could have just took profits at like 15%, and I wasn't like managing it well. I literally did everything wrong, and I was up still. I was still up, even though I was like trading it wrong. And then it just comes back and stops me out after being up like on the day like for a while. Um, so I mean, it's just like lessons learned. I mean, every dollar that I lose, I feel like I get better somehow. Like learn a lesson from it. But I'm gonna go for the day, and hopefully, like you can go back and study those charts. Like really, like it'll really help you out. So later.